Welcome. Again, if you guys are brand new, fantastic. We're going to give you a little bit of an overwhelming session this evening. So first off, and when I say it's overwhelming, it's going to be a little overwhelming. We're going to go through a lot of different strategies this evening. I'll allude to those here momentarily and get into some specifics here momentarily. So right off the bat, I want to tell you, yes, this is recorded. So if you miss something, I'm going to do a lot of different mouse clicks. Right, so I'm going through. When I say a lot of different mouse clicks, for the most part, there's a lot of things to know inside of thinkorswim, and well, we're going to get to much of that. This should again be recorded. Should be coming in. I think I'm going to go a little bit over an hour tonight, if that's all right with everybody. Somebody's asking if we're going to be an hour. Give me like an hour and 10. I got 3 major strategies. With that, let's do this. TheoTrade's Guide to Analyzing Option Strategies on thinkorswim. I happen to be Don Kaufman. Let's go through a couple of slides. Here's a risk disclosure. We are not financial advisors or a broker-dealer. So this evening, we happen to be talking a little bit about the thinkorswim trading application. I do know quite a bit about the thinkorswim trading application. Why? Well, I worked there for about 15 years. A little bit of a copyright disclaimer here. This is ours. This is not yours. I also want everybody to know, every time we do a session, you need to get a hold of me, okay, or anybody here at TheoTrade. We use general inbox, support at TheoTrade.com. If you want to get a hold of me, just put Don in the heading. That's fine. Listen, we answer emails, a lot of emails, and it's important to us that you guys know that. Here's our address here in Scottsdale, Arizona. Why are we in Scottsdale? I don't know. I had enough of Chicago. Have you lived in Chicago in February? It's not pretty. This is a little bit about me. I'm a co-founder here, lead instructor at TheoTrade. I've been around options pretty much my entire life. Late 90s, right out of college, I started trading in Chicago. A short time thereafter, I joined what was a startup firm called thinkorswim. I went through a couple of different mergers, acquisitions, taking the company public. I also remained at TD Ameritrade for 5 years after TD Ameritrade acquired thinkorswim. I ran their institutional education group. Then I moved back and ran the retail education group. That's all of us, the retail education group, for a period of about 4 years. And there's 7 million clients at the time. So that's a little bit of my background. Again, really familiar with thinkorswim. There's a lot of tools that we're going to talk about today specifically. We helped build. I've done a couple of different CNBC tours, and listen, we're on financial media pretty consistently in a day-to-day. I just like this one. If you're going to be pitted against somebody, that's who you want to be pitted against. With that, a little bit about TheoTrade. We specialize in education for stocks, options, and futures. We're all founded by professional traders and trading educators. Everybody on the crew here at TheoTrade, and I mean everybody on the crew, has a minimum of 15 years of experience. Okay, that is trading experience. A couple of us have got, I've got almost 2 decades under my belt. What we're going to talk about tonight, we're here to help you mitigate the risks in the market while learning a skill set that can last a lifetime. I also like to elaborate a little bit upon who the instructors happen to be here at TheoTrade. Now, again, myself included in this group, but TheoTrade is not just Don Kaufman. It's Doc Severson, stocks, options, technicals, Jeff Bierman. Jeff actually worked with me at TD Ameritrade for a period of about 7 years. He actually worked specifically in my group. He was also the chief market technician for TD Ameritrade, which is a pretty highly coveted position. A lot of people don't know this, but if you've ever traded on thinkorswim, if you like the scanning technology, if you like some of the charting technology, good, because a lot of that came out of Jeff Bierman. Corey Rosenblum next. Corey Rosenblum's actually our newest full-time instructor here at TheoTrade, senior strategist, kind of our swing trader. Then we have none other than Steve, which is known as Slim Miller, 43 years in this business. Last but not least, Tony Rago, NASDAQ futures and intraday strategist. So that's a little bit about kind of who we are, what we do. We have put together what we believe to be the preeminent team of educators in this entire industry. We're not just a one-person show. This is 6 full-time instructors. Now, two goals this evening. Number one, we're going to learn how to construct and analyze complex option trades on the thinkorswim trading application. That's our number one goal. What I'm going to teach tonight, I want you to know something. This is not exclusive to thinkorswim. It's not just exclusive to TD Ameritrade. Speaking of which, if you have a TD Ameritrade account, fantastic. If you do not, we can provide you a link to opening a TD Ameritrade account that will also give you a discounted commissions rate. We'll feel free to post that into the chat rooms. Get that done here momentarily. So the first thing is, again, learning how to build, complex trades. Number two over here is we're going to discover 3 unique strategies that can produce what I term as kind of mass profits or serve as a spectacular downside hedge. Now, let us explore these 3 strategies. Now, many of you are and have been around TheoTrade for a while. Maybe you've come to a couple of TheoTrade broadcasts. Got to ask that question. By the way, how many of you guys are brand new? Even if listen, you could be listening to this recorded on YouTube, a month from now. But hey, these are not rhetorical questions. Yell at YouTube. It's all right. How many of you brand new? This is the first time you've kind of come out to a TheoTrade presentation. Anybody? Because you're about to get thrown, and I'm just going to let you know, you're going to get thrown a little bit at the deep end of the pool. The 3 strategies that I'm going to be talking about this evening, now this could be a great for review for some of you, and for the others of you, even if you're experienced, by the way, even if you're experienced, you're going to get something tonight, because we're going to talk about an atomic hedge, we're going to talk about VIX volatility spreads, and we're going to talk about risk twist spreads. If you're familiar with it, great. You're going to learn even more tonight. If you're not familiar with these strategies, well, get familiar. All right. We're done with the PowerPoint, on to the trading application. So we're going to jump right into the thinkorswim trading application. And if this looks at all different than your thinkorswim, listen, I just closed up this left side bar, right? This is called the left side bar. That's where my mouse happens to be. Everything, well, on the left side happens to be known as the left side bar. So all I'm going to do is I'm going to close that up. And the reason I'm closing it up is to make it, well, a little bit easier to be able to see the full screen. Now, we're going to talk again about, 3 strategies. And I'm going to explain all 3 strategies as I happen to build them. I'm going to start with one that I so strongly believe that everybody, okay, if you have a portfolio, if you have any capital at risk, if you have a 401k, if you have an IRA, you need to learn this. Now, I'm going to spend anywhere from 10 to 15 minutes on each strategy, and boom, I'm going to move on. It's important that we are very, very timely in this. The first strategy that I'm going to talk about this evening deals with what we term risk mitigation, right? And when I say risk mitigation, we're going to be talking about something like a 401k. All right, just out of curiosity, how many people have a 401k? If you've got a 401k, that is fantastic. If you don't, that's okay too. Or you could have an IRA. Or you could just be long stock. Long stock. All right? You could have any one of those. Now, again, this is not the only strategy we're going to be talking about this evening, but what this strategy is designed to do, okay, is to comfort this basket. All right, this is your basket, your nest egg. When I say comfort it, we're actually going to teach you a quick hedge for the basket. So if you have a 401k and IRA, if you're just long stock in any way, shape, or form, all right, even if you're a Canadian engineer in a retirement account, you can do this. You can do this, even if it's not in the same account, right? And I stress that. So I like that. A Canadian engineer in a retirement account. Doesn't get much better than that. So the first strategy I'm going to teach you, I'm going to do this in kind of I'm going to back our way into it. Let's say that we went out and we owned a big portfolio. Okay, what's a portfolio? Our portfolio is the equivalency of 1,000 shares of the spiders. So all I've done at this point is I've come up here and I've clicked on this ask. Okay, so I clicked on the ask, then I went to this drop down, and I made it 1,000 shares. Now, what does this simulate? Okay, and these again, not rhetorical questions. What does this 1,000 shares kind of simulate? Well, if you buy 1,000 shares of $272 stock, I mean, this simulates like a $272,000 portfolio. Okay, now I know that your 401k is not necessarily the spider. Some of you it might be, right? If you have like a Vanguard 500, you got yourself the spiders. But for the most part, let's say that the 1,000 shares represents something similar to your 401k. Make sense to everybody? Yes? Good? We okay? There's just a lot of people on tonight. So I'm going to ask a lot of questions, and it just, like, listen, you can say, I'm okay, or you can say, no, the little hamster's getting stuck in the wheel. I get it. So we're going to take the 1,000 shares. This is just a simulated trade. And after I build this trade, I'm just going to right click on it. All right, it was a right click. Now there's a difference, right? There's left click, right click. I'm going to right click, and I'm going to get this drop down menu, and I'm going to click on Analyze Trade. So we're just going to drop the trade into thinkorswim's Analyze tab. So now that we've dropped it into the Analyze tab, this is what 1,000 shares just looks like. That's it. We're long 1,000 shares. Now, let's explore some of the risks of being long 1,000 shares. If the market goes up, you're beautiful. If the market goes down, you're going to be in a world of hurt. Yeah? Easy enough? Okay. Doing great so far? 1,000 shares. Okay. Now, let's create a hedge for this. Now, what's a hedge? Now, a hedge, I'm going to clip off the downside. When I say clip it off, I'm not kidding. I'm actually going to clip off your downside risk. Okay, and I'm still going to leave much of the upside potential. That is what you want to do in a marketplace that's got rising interest rates. That's what you want to do in a marketplace that just looks right now. Okay, listen, I'm not here to argue whether we're bullish or bearish. Okay, I wear my position right up there on the edge of my shoulder. I don't hide from anybody. I've been bearish on markets for a while. Okay, working out a little bit. We've come down a little bit. What have I done? Well, I've laughed. I've cried. I cried a little bit more, but then I laughed. The last couple of days, I'm crying again. But again, the volatility is evident. And at this point in time, any kind of hedge may be a good thing for you to acquire. And understanding how to hedge is absolutely critical. Because, listen, there's going to be a lot of people in here. I'll just cut to the chase. There's going to be a lot of people that are going to sit there. And if you open up, 20 years, I'll knock this down to a monthly. They're going to sit here and they're going to take a hit eventually. And most people just don't do anything. And all I'm suggesting is maybe we can hedge our portfolios. How can you hedge it? Well, I'm going to delete this simulated trade out, and I'm going to make a bit of a complex hedge for you. Now, when I call it a complex hedge, anything with more than one leg in it. When I say one leg, one option leg, any strategy with more than one options leg in it would be considered complex. Now, this evening, again, the first trade I'm going to build, we call this the Atomic Hedge. Okay, it's the Atomic Hedge. And I'm going to show you exactly how to construct the Atomic Hedge. Now, I'm going to use a methodology here that is the most efficient, in effect, to be able to place the more complex trades. So let's kind of display just this. All right, so how do we go about doing this? Okay, there's a button on your keyboard. It's the control button. When I hit the control button, do you see this come up? All right, there's like a 1, a 2, a 3, a 4. The control button is actually a hotkey. And even though, I'm not that into hotkeys, but this one's a lot easier. So when you click control, left click on the ask to buy something, left click on the bid to sell something. And you can actually construct customized strategies. That's it. So let's actually construct now what we call the Atomic Hedge. I'm going to left click on the ask of the 267 puts. So I'm going to be buying 267 puts. And I'm going to be hedging 1,000 shares. So in this case, I'm going to do 10 puts. Then I'm going to go out there and I've got to pay for my puts because the puts are going to cost $2.23. So I'm going to go out there and I'm going to try to pay for my puts. Let's go ahead and I'm just looking at the deltas over here. Let's use the 276. We're going to do 2 of those against the 280 calls. We'll do 2 of those. Actually, I need to bump these up to 20 contracts each. Okay, this trade happens to be done for relative what we call even money. This trade is not, I mean, it's done for a 1 penny debit. It's not really a credit or a debit. The way to think of it is just even money. In fact, I'll move it to even money. And when I say even money, again, the trade is being done for not a credit nor a debit. What I've done is I've gone out and I bought puts. So I went out and I bought puts. And why did I buy puts? Well, I bought puts to give myself a downside hedge. At the exact same time, I financed those puts by selling calls against it. Now, how would this look against 1,000 shares of stock? There's a way to find out, right? It's a customized strategy. It's for June 20th expiration. Right-click on it. Right-click on it. Go to Analyze Trade. So now we've actually got, all right, the stock against the hedge. And you can see precisely what your downside risk is. So I'm just going to zoom in really tightly over here so you can see this is, okay, a what? A $270,000 portfolio. $270,000. And you have just about $5,000 at risk. That's it. You have $5,000 at risk. Do you still have upside potential? Absolutely. Now, here's one of the first things that you're going to learn about risk graphs. Okay, this risk graph is not really effective the way it's currently built. Why? You know, a lot of people, they look at risk graphs and they just take, you know, they kind of take the computer's word for it. All I'm doing is zooming in over here. They take the system's word for it and they're like, well, this is going to be my risk over here. Yeah, that's actually garbage. And I'll tell you why this is garbage. This hard line right there, unfortunately, that's what we call at expiration. And what at expiration means is, well, at expiration, this is assuming that you not only held the trade, but you held the trade to, you know, the Saturday following the Friday, which nobody effectively does. So there's kind of a more slick tool in here. You come in here and you do what's called day stepping, and we'll go +4. Okay, and what that basically means is, and I'm going to show you exactly what it means, because this is separating the fact from the fiction. Because again, most people, when they show you, if you look at risk graphs at expiration, you're doing yourself a huge disservice. Because even though this trade is good till June 20th, okay, you're going to be rolling it, exiting it prior to that. So I'm going to do +4 at day step, and I'm going to put 8 days, okay, between it. And with 8 days between it, look over at this little legend right here. It's considered a legend. It's just different dates. Each one of these lines is color-coded to a date. That is much more indicative of what you're going to experience from a profit and loss perspective. So now you're able to analyze the hedge, right? How can you analyze it? Well, you can just kind of grab the mouse and you can see, well, you know what? If the market rallies, I still have pretty good upside potential, but my downside risks are hedged. And this, I just cannot stress enough. If you just had a very, okay, straightforward hedge like this, I'm just going to zoom out for a second. Yeah, straightforward hedge like this. If you had it on any time in the last few months, would this have saved you capital? Every single person that has a 401k or an IRA would agree, oh yeah. I mean, there's just no question. Have we come off huge? No. Okay. But the marketplace was in the 280 handle and now is in the 270 handle. Okay. And a lot of that risk could have been controlled having used the Atomic Hedge. Now, from here in the analysis, and I'm going to spend a little bit more time in this first strategy because it's such an important concept that people have to get. I cannot stress this enough. You'll see this tonight, and I don't know, there's what, 500-600 people in here this evening in just one room. I'm looking at the other room right now. No, actually I have over 1,000 people tuned in right now. But when you're looking at this, I guarantee a few dozen people, they don't do anything. They don't do anything, and they watch, you know, as the market may deteriorate. And again, you're in a rising interest rate environment. It doesn't matter at this point whether you're bullish or bearish. What matters at this point is that you understand that you can do something about the risk without having to give up extraordinary upside. So the first thing that I really wanted to introduce to you this evening was this Atomic Hedge, which again has very little downside, protects a portfolio. And what we can do, and again, tonight is a little bit outside the scope of this, but what we can do is we can actually teach you, instead of this being 1,000 shares of the spiders, that could be your 401k, right? And we can teach you how to put the hedge in the IRA. We can teach you how to put the hedge in a regular taxable account. It doesn't really matter. I mean, what's better? Do you pay taxes on the hedge or just lose a bunch of money? You go, I think I'd rather just lose my money. No, you'd rather do the hedge. Okay, so that's the first trade that we're doing a little bit of analysis on. Now, the last element that you can kind of take yourself through is you can say, what if the stock goes up? What if the stock goes down? To do this, right, there's a little button right here, and it says set slices. Now check this out, okay? If you want to know what your profit and loss is going to be. Now, this is, this is one small click for Don. This is one giant leap for new traders. We're going to put in here 11 rows of 2% step. And what that does, and you're like, oh no, here's exactly what it does. Okay? All this is doing is saying, what does the hedge do right now? What does the hedge do if we move up 2%, up 4%, up 6%, down 2%, down 4%, down 6%? Okay? And you can see the profit and loss. So if the marketplace, okay, in just the next couple of weeks, couple of days, whatever it is, let's say that the marketplace was capable of swinging 6% in either direction. Now, we have seen more than 6% swings recently in either direction. What I want to get to you, all right, and what I want to really infiltrate, and this is again, even those of you that have substantial experience, you're watching the TheoTrade chat room, it's fine. All I want you to get, we go down 6%, you lose just over $4,000. We go up 6%, you make almost $9,000. Why don't more people do this against their portfolio? It's a layup strategy. It's easy to do. It's easy to execute. All right. You can put any size on, whether, it doesn't have to be 1,000 shares. You could have 100 shares of the spiders and still do this. All right. Ready to move on? Anybody? Next! All right. We're going to go to the next strategy. So I'm just going to take this. I'm going to delete it out. I'm going to come right back up here, and I'm going to reset my slices. All right. Now we're having fun. Okay. I'm also going to come over here, and I'm going to go back to expiration +1. Okay. Everything is reset. In fact, if you've never done this before, you just come up here and reset the entire Analyze tab. Yeehaw. All right. Let me hide all my positions, and we're just going to look at simulated trades. Okay. So that was the first position that we're doing this evening. All I wanted to do was teach you to build a complex trade. Again, complex just simply means more than one leg. To take that complex trade, to drop it into the Analysis tab, and then to go through analysis on it. All right, next position. Next position this evening, we are going to move on to a trade. I'm going to delete this out. We're going to move on to a trade inside of the VIX. Okay, the next trade we're going to be talking about this evening happens to be termed a VIX Volatility Spread. VIX Volatility Spread, so VVS. So again, this one, all right, this is what we'll call a VVS. It stands for VIX Volatility Spread. And in effect, what we're going to do is we're going to go out, okay, and we're going to purchase a spread looking, okay, for a wild move up in the VIX. Now, let's go look at the VIX for just a moment. We're going to purchase a spread, and this just happens to be a 9-month inside of the VIX. So this is a 9-month inside of the VIX. I want to go out and purchase a spread looking for nothing more than just one spike up in the VIX. That's all you're going to need. A spike up in the VIX. Can that happen, I don't know, between now and like July expiration? Sure it can. But the problem is you don't know when it's going to happen. The VIX is not exactly like, well, rolling out a red carpet for you and be like, okay, I'm going to spike. So when we go out and we do a VIX volatility spread, we don't really want to pay for it, because if you continually pay for it, you don't know when the spikes in the VIX are coming. So why go out there and continually buy this spread. So what we're going to do with the VIX volatility spread is we're going to finance the trade, okay, by selling options to finance the trade to buy other options. So shall we? Let's get into it. Here comes the VIX volatility spread. Now, the VIX volatility spread, I actually happen to have one on. I have one on here in June, and you're going to see me reconstruct one now for July. So the July expiration, I'm going to go about 62 days out. First thing I'm going to do is I'm going to sell the 13 puts. Now, why am I going to sell the 13 puts? Because I feel special. Now, I'm going to sell the 13 puts. Now, the 13 puts, by selling the 13 puts, first and foremost, the VIX is there's no stock behind it. It's a cash settled instrument. So if you sell puts, you don't have to worry about getting put stock early. You cannot get put stock early. This happens to be what they call a European style option. Also, the VIX options, they could be a little bit convoluted, but if you do this right, the VIX options are great. And they're great because not only are they European style, which means, again, there's no early exercise or assignment. They also qualify for Rule 1256, which is the 60-40 rule. It's improved tax treatment for some of you. Please check with your local tax attorney. But I'm going to go out and sell a 13 put. If you sell a 13 put, where do you want the marketplace to go? You want it to go where? I want it to go up, Don. What happens if it goes down? You're going to be okay. We're not just going to sell the 13 put. We're going to sell the 13 put, and we're going to buy the 10 put against it. Now, that spread goes for about 60 cents credit. Then with that credit, I'm going to go out and I'm going to buy, all right, an 18, let's see what I can do, 18.23 spread. Perfect. Okay, done. So you're like looking at this spread and you're like, I don't really get it. Well, here, get this. Get this. Right now, you can sell a $3 wide spread to purchase a $5 wide spread. Sell a $3 wide spread. Now, the $3 wide spread, you're selling a $3 wide put spread to finance the cost of a $5 wide call spread. This trade has some really, really nice attributes to it. Let me show you in the Analyze tab. So this is another spread that happens to be done for what? Even money. It's even money, meaning I don't have any out-of-pocket costs. Do I have a risk in the trade? Yes, this does differ. The Atomic Hedge really doesn't have any risk. You know, if the market goes up, you make money on the Atomic Hedge, what we just showed a moment ago. If the market goes down, you're going to save money with the Atomic Hedge. This one has a little bit of risk. If the volatility were to absolutely crash down, let's say to 11, we take a little bit of risk. Okay? Not a lot of risk, a little bit of risk. However, you don't have to pay anything up front for the strategy. Well, I mean, to me, it's like, what's not to love? So I come in and I right-click on this and I cruise over to Analyze Trade. So once again, we're going to analyze the trade. I'm going to kind of zoom in and I'm going to show you a little bit about the risk graph. Now, the risk graph, and I'm going to close up these price slices. You can see it a little bit cleaner. All I did now is I built the VIX volatility spread. I dumped it over to the analysis. Okay. And I know everybody, again, they look at this kind of hard line. You're like, oh, this is what you're going to make. Let me tell you something. This is not what you're going to make. That's at expiration. You could make as much as, what, $5 on this spread. Could you lose as much as $300? Yes, but the VIX would have to be under 10. Now, we haven't had the VIX, for you to lose a full amount, we haven't had the VIX under 10 really this year. So you've actually got volatility right now on your side. If you believe volatility doesn't go much below 13, you really don't have much to worry about in terms of risk. But I told you, this is not a riskless position. What do we want to do? We want to come over here to expiration, and we want to go to expiration, what? All right, and change it to day stepping. Day stepping is going to give you a much more effective means of what your real profit and loss happens to be. And we're going to day step this thing out in time. Okay? All I'm showing you right now is how the trade really and truly matures. So what I did is I went into day step, okay, and I put 15 days between it. So you can see we go from what? Today's date, right? We jump out, actually this is tomorrow, we jump out to what? June 1st, June 16th, July 1st, July 16th. It's showing you how the trade is going to mature. Again, we're showing you how this trade is going to mature over time. So the VIX volatility spread, if volatility spikes any time between now and the July expiration, right, we either hit a degree of profitability or, okay, we just don't simply have any risk in the spread. And I'm going to tell you right now, this is not necessarily, you're like, well, how could I actually use this? This is not necessarily, okay, a trade that's going to be super high probability, but this is a trade that has spectacular payouts, okay, when the volatility does spike. And we've seen a multitude of volatility spikes this year already, everything from 10 up to, let's call it 40. I don't think the 50 isn't even real because we're only there for minutes. 10 maybe up to 30 or 40. We came all the way back down to 15. We shot back up to 25. We came back down to 15. We shot back to 25. Now we're all the way back down to 13. You better believe I want one of these things on. I put one on already when we were back down to 15. Now at 13, could I put another one on? Yeah, there's no problem adding a little bit of risk to my position because, again, anytime the volatility spikes, I want to be in the VIX. Now, you can use this strategy for a number of different means. And here's another one where I can't stress enough. This is another strategy that people will look at and they'll be like, oh yeah, that seems pretty cool, right? Okay, that seems all right. But you could use this for absolutely massive profits, or you could use this as a hedge. But this is a strategy that you learn, you tuck away, and when the volatility hits a bump in the road, you're there to profit. Every single time, you're there to profit, right? These are the strategies that will separate people that are rather successful from people that are not. And you know what? A lot of you guys will go out and you'll learn to sell options. And the first time that volatility really jumps, you get killed selling options, right? How many people have been through that? Anybody? Come on, people. Admitting is the first step this evening. So when you look at this and you're kind of, surmising, yeah, I've gone out, I've sold some options, and then I got absolutely killed the first time volatility spikes. I mean, for some reason, everybody's around this camp like I should always be selling options. First of all, I don't agree with that at all. I grew up selling option premium. I grew up selling options premium. And the guy that grew up selling options premium is telling you right now, I wouldn't sell options premium right now. But if you do it, okay, and I'm going to say this as eloquently as possible, you damn well better have some type of VIX trade on because you're going to get killed sooner or later. And when you're going to get killed selling premium, this is actually going to help you. It could very well save your bacon and a huge amount of your account if you know how to put a VIX volatility spread on effectively. These trades, this is not as easy as just build it and let it ride. You need to know the particulars. You need to know, why did I use the 13 strike, the 10 strike? Why did I go out, to the July expiration? There's a lot, okay, of nuts and bolts. By the way, I know that there's certain people that always sell premium, but you know what? If you're going to follow somebody off of a cliff, great, go for it. But you better have something to hedge that risk. Hey, they only have to be wrong once. The thing with selling options premium, you'd be right 90% of the time. You only got to be wrong once, and it all comes crashing down. And I've been through the life cycle of it. I mean, relatively speaking, I don't think there's too many people in the world that have looked at as many brokerage accounts as myself and a couple of people on our TheoTrade crew. I mean, the buck kind of stops here. We looked at people's accounts, and studied accounts for the better part of almost 15 years while at thinkorswim and TD Ameritrade. And we learned so much at TD Ameritrade. There's 7 million accounts when I was at TD Ameritrade. You just, you didn't, by the way, we didn't look specifically at one account. We would study, thousands of accounts simultaneously. And where people take that big hit, the iron condor sellers and so forth, there's nothing wrong with it. But you need strategies like this to offset a degree of that risk. Onward and upward. We're making good time over here. All right, having a party. It's the options happy hour. Let's continue, shall we? Okay, next strategy we're going to cover. All right, and this is going to be the last one for this evening. By the way, this is also, I would say, a more intense strategy, we're going to come back to the spiders. And this, to me, this is kind of like one of the big, I say like kind of token trades of, TheoTrade and a lot of what we do. We're actually going to build a risk twist spread. This is a type of a ratio spread. And with this, okay, this is the one where I say this has the most potential. This also has what I would term mass potential to it. And it also, I'm going to let you know right now, this is a low probability shot. It's a low probability shot. When it hits, the results are absolutely stellar from this trade. So let's get into building what we call a risk twist spread. I'm going to come out here to the August expiration, just using the August primary expiration. And you can see, and here, listen, I don't mind showing you. You can see I've got some positions out here, POS, POS, POS. That's because this happens to be, all right, a risk twist spread. Now, markets have moved a little bit, so I'm going to actually build a more prevalent risk twist spread. Once again, this is a custom order type, and I'm going to talk a little bit more about custom order types as we kind of go along, and that's all we've really been covering tonight. But custom order types, it's again a little bit of imagination along with a whole lot of experience, and you can build roughly any trade to suit your needs. And that's where I really felt the risk twist spread kind of stood out. So let me actually construct a risk twist spread. So we're going to go out, we're going to sell a 268 put. We're going to turn around and buy 1, 2, 3 of the 258 puts. Then we're going to turn around, we're going to sell a 256. The whole thing is done for $1.18 debit. Now, you got to be a little careful with this one because this is a ratio. It is a 1 by 3 by 1. It is being done for a debit, meaning you're paying $1.18 for it. If you were to do one contract, it's $118. However, there is margin held in this trade. But don't be judgmental yet. Okay, before we go any further, right? You have to realize I'm selling a put, okay, to finance the purchase of 3 puts. Why am I then selling another put? It's to offset the skew. There's a reason that we call this a twist spread. It's a risk twist spread. If you've ever looked at implied volatility, okay, the implied volatility, as you go, and I'll close this up for a second, as you go further out of the money, the implied volatility increases. So to twist a little bit of the implied volatility in our favor, you got to realize we're out there and we're selling a 12 vol, and I'll kind of elaborate upon this just a bit. We're out here in a strategy and we're selling a 12.7 vol. Then we're going out there and we're buying 3 15.3 vols. So that's kind of against us. We're selling 12 vol, buying 15 vol to offset some of the skew. Then we're actually selling almost a 16 vol against it. And it's one of the reasons we call it a risk twist spread. So in effect, I've built the trade. I'm going to right click on it and I'm going to come to analyze trade. Now, as I start to analyze this trade, I am already in day stepping mode. Okay, I'm going to zoom this one out. As I said, this happens to be the most powerful of all downside positions that I believe that you can build in this marketplace and offset some of the skew. You are looking at this correctly. This is only one unit. We don't call this one contract. Why don't we call it one contract? Because it's a 1 by 3 by 1. This is one unit of a hedge. Just one unit of a hedge. Now, what can it realistically do? First of all, it's on between now and August, but what can it realistically do? Well, let's take a quick glance at the markets. I'm going to come over here and delete the slice. If the market were to sell off by 10% between now and then, all right, you're going to have some pretty stellar results. But this is not, again, these results are not inclusive of changes in implied volatility. So I say changes in implied volatility. If I come over here to this little sprocket in the Analyze tab, I can start to bump up volatility. This is a Vega, which is volatility sensitive strategy. In fact, if the market were to sell off by 10%, I think we could all agree we would probably have volatility bump up. Let me delete a couple zeros over here. We'd probably have volatility bump up by 10 full points easily. So I want to show you what a 10-point bump in vol does. That's just taking the volatility from where it currently is, which is right around what, 13, okay? And it's bumping the volatility to 23. That's all I did, is just bump the volatility to 23. The strategy, okay, would be up about $1,300 realistically. And this is very, very lenient. I mean, the real number in here would probably be in excess of like a 15% vol bump, and you're looking at a trade that might be worth as much as $1,500. Okay, and that's today. Actually, as time moves forward, things can even become progressively better in the strategy. That's today if we were to see a 10% move down. So we could all agree that a 10%, okay, a 10% decline in the marketplace is going to be infrequent, right? So a 10%, all right, decline in the marketplace is going to be infrequent. Well, that's okay. The strategy only cost you what? $100, right? I know a lot of people will look at the risk in this trade, and again, that is the real price right now. I know a lot of people will look at the risk in the trade and they'll think to themselves, let me reset the parameters, okay? They'll think to themselves in this strategy, well, I could lose an additional $10. We'll actually show you ways that you do not have to lose a full $10. And this is one of the reasons that I am kind of reiterating this strategy, because there's a lot of people in the TheoTrade chat room and they've gone through, and we have classes on this. And I want to make sure that everybody that's in the TheoTrade chat room, that you've reviewed the classes on this, that we're all up to speed on the strategies. And it's one of the reasons that I wanted to spend time this evening. And by the way, we just invited the entire world, this evening to this, because these are 3 strategies that not only can you employ, you should be using them now. There's no reason, like, why wouldn't I do this risk twist spread today? Okay, why wouldn't I do this? All right, margin constraints here. When you hit confirm and send, I don't mind showing you this. This is my IRA. I have, $250,000 of buying power left in the IRA. The buying power effect in here is going to be $921 inside of my IRA. That's it. And that's an IRA. This is a retirement account. You could do this in a regular account. That's fine. By the way, I don't have to do this in the spiders. If you really wanted to beef this thing up, could you do it in the SPX? Of course you could. But I mean, understanding like a risk twist spread, this thing is just, it's a weapon of absolute, mass potential. It's the only way to really describe it. One of the coolest things, though, about this spread, you only really have to put it on quarterly. So you don't have to look at this every month and go, I'm going to risk $100 a month now, but you might risk about $100 a quarter. You okay with that? So let's say that 4 quarters go by. 4 quarters go by and you lose what? Let's say even $500, including transaction costs. $500. But once every couple of years, you get a what? You get a 10% down move. The market tanks. Okay, this is what we term positive expected returns. Okay, you're not going to have to hit a home run. This trade can be used to hedge a portfolio. This trade can be used for just a pure downside shot, and this trade can be used to hedge other options trades. You go out there, you sell naked puts, maybe you put on a couple of units of risk twist spread. In fact, in the class for this strategy, we absolutely go through the allocation for it. The other thing is, and I know that a lot of people, okay, are tuning into this. This is not something that gets rolled. It is something that gets closed. The other aspect of this is, I'm going to tell you right now, this one is a big weapon. Do not try this one without being fully versed in how to close this, because I'm going to tell you what will happen. All right, people that do not understand this trade, they'll actually hold the thing into what they call the valley of death. And one of the first things that we teach in the class is how to circumnavigate any risk in this trade. It's actually pretty easy to do, but you can circumnavigate any of the risk in the trade. And it's one of the first things that we teach in the risk twist class. All of the nuances of the trades that I've covered tonight, though, You've got to understand those nuances. Why did I pick the August expiration? You know, if August is good, why not go out till March, 300 days out? Then you'd only have to place it once. Okay, won't work. The volatility is just not going to react the same way out there. You know, why not even go all the way out to December? Won't work, right? You have to know precisely the time frame to execute the trades. You got to get the ratio right. You got to get the distance of the strikes. I just made this one $10 wide. Sometimes that works, but I'll tell you what. Instead of doing it in spiders, could you do this trade over in the Qs? Let's go off the beaten path a little bit. Nothing here in the Qs at all. Let's go off the beaten path and see if we can't build one in the Qs. I'll go right back out to the August expiration, and I'll try to construct one in the Qs. So we're going to sell the 65s, maybe come over here to the 60s, 2, 3, and bump to the 58s. Okay. Now look, the Nasdaq's got a heck of a lot more volatility, and it's going to cost you a little bit more. So you could actually manipulate the strikes here a little. And again, little ingenuity, little experience. 1, 2, 3, 1. This is still well within the parameters. We'll analyze this trade. Now we've actually built a risk twist inside of the Qs. Right? Now, not going to lie, I know exactly what strikes to use. All I did is I looked over at the deltas. The deltas will tell you everything. Okay? There are delta parameters in effect to be able to build this trade. I like this inside of the Qs. I also like this in individual stocks. So I know a lot of people are looking at an underlying called Tesla lately. Anybody heard of it? And they're a little worried that maybe they don't make it. Okay, you could pull a risk twist in there quarterly. Could take a little bit of risk, but you have to be dead on with how you do this. Okay? You know, somebody actually asked the question, can the SPY example be traded? Of course, anything could be traded. Okay? But I'm going to suggest that you do go through the courses prior to this. Right? We have courses, they're ready for it. They're absolutely, when I say courses are ready, we have courses that are designed specifically for these. In fact, I'll go to them here in just a moment. One last concept that I want to give you tonight is, as you are creating these more complex trades in the VIX and the spiders, you know, you can even come into the monitor tab and you can kind of do a sub portfolio and set some of these strategies aside. I've actually got a number of different kind of portfolios. Now, that's something, of course, better saved for another evening. But the key tonight is to learn how to use, okay, and make sure that you are employing strategies like the Atomic Hedge, okay? And again, I'll recap that in just a moment. Like the risk to a spread, like the VIX volatility spread. One thing I always kind of, you know, elaborate upon is, you know, you're one trade away from this. This happens to be just a quick screenshot of the Atomic Hedge. And this is, again, it's the first one that we covered tonight. And the reason I elaborate, and I actually put a couple of slides together of this, but the reason I elaborate upon the Atomic Hedge, it's the most straightforward of all the tactics. It provides definitive downside protection. I don't care if your portfolio is 50 grand. It doesn't matter to me. Okay? It could be 50 grand, it could be 20 grand. You can mitigate that downside risk. Here's some of the characteristics, though, of the Atomic Hedge. All right? You can limit downside risks while maintaining upside potential. Risk is limited to precisely your comfort level. Okay? In fact, here's one of the trades I built a little bit earlier. You need not use a stop order. People use stop orders, and what happens with a stop order? Ooh, you get stopped out. The probability of profit is really high. Why is the probability of profit high? Because you're not really inhibiting yourself using this thing. It's a perfect spread to reduce risk of the stock portfolio. It's an excellent tool for those seeking returns, yet desire reduced risk. Right now, consider the Atomic Hedge. If you're looking at the marketplace and you're thinking to yourself, I'm bullish, but I'm nervous, use this strategy. I'm bullish, but I'm nervous. Okay? If you're bearish, listen, if you're bearish, get out of your portfolio. I don't mind saying that. Like, a hedge isn't going to save, all right? A hedge isn't going to save life savings. If you're bearish, get out. The hedge is to soften the intensity of the blow. Now, fear not the Atomic Hedge. You know, people, somebody actually came in and like, you're moving too fast for me tonight. Of course I am. I have an hour and 3 really hardcore strategies. But you may not know a lot about options, have limited experience. We can show you exactly how and when to place the Atomic Hedge in a matter of a few hours. We have a class on it. It is 3.5 hours on the Atomic Hedge. Every detail is covered on the Atomic Hedge. Those of you, again, if you're in the chat room, Brian is also posting the archives within the chat room right now, which is fantastic. We have a detailed recipe, like literally step 1, step 2, step 2, step 3. In fact, it's almost a 10-step program to be able to get into an Atomic Hedge. And I always say you wouldn't bake a cake without a recipe, so why trade without one? Follow this. And this also goes for everybody that's in the TheoTrade chat room. You're tuning in tonight. Please make sure that you follow the steps, because the Atomic Hedge is one that people get a little out of control with. They kind of over-hedge your portfolio, and we just don't want to do that. The next thing that we showed this evening, okay, is what I kind of call minimal risk, massive reward. This happens to be the VIX Volatility spread that I showed, okay? Very straightforward, very eloquent. If you sell options premium and you're a little nervous, or you just want a nice shot in the VIX. If the VIX spikes, you want that big burst to the upside with the VIX. Perfect strategy for you. The other thing I like to, again, elaborate upon is that this one, it doesn't cost you anything out of pocket. So the question is like, well, why not do it? I mean, could you lose a little bit of money in it? Sure. I had no problem saying that. Of course you can. All right. But there's pretty good chances that you're going to get volatility spikes, even this summer. There's a huge misconception and a big misnomer just in markets in general, that summers are not volatile. That is absolutely not true. Look back at the history of volatility and you'll find that August, September, okay, the last time I looked, August is still summer. It's actually one of the more volatile months in the entire marketplace. Okay, you can go back and, every year that I trade, everybody's like, it's summer, nothing's going to happen. Yeah, till something happens. This is a fine strategy to use for what you think is going to be summer doldrums. Volatility picks up, though, it's going to be great. But if volatility dies down, don't worry about it. Just keep putting the strategy on. All right, very, very minimal risk. Now, the characteristics of the VIX volatility spread. You're pretty much risking 1 to being able to make 4 with about a 60% probability of not losing anything. That's what this strategy has right here. You can look at the probability of the 13 put expiring out of the money. It's about 60%. The VIX volatility spread can work in a down market, can work in neutral markets, can even work in trending bullish markets. Even in a bullish market, again, if the volatility is already down, you're not going to get killed. Pay nothing upfront for the VIX trade. You never have to buy a stock or worry about option assignment risks because, well, it's the VIX. There are no early assignments. Your risk is minimal. You don't use stop orders. It's an excellent tool for those seeking returns to build a smaller account. Now, the VIX volatility spread, I want to make this clear. This is a completely different course from the Atomic Hedge. Right? This is it's a 3-hour full-blown course, and it's good stuff. All right? Don't worry about learning the VIX volatility spread. Course takes you through it, how and when to place it in a matter of a couple hours, detailed trading recipes. We actually have a tremendous amount just about the VIX in general as the intro of this class, and it's got a recipe that literally takes you through how to build and how to construct the trade. I mean, listen, I placed a couple of trades into the analytics, and just because you see the trade, can you copy this trade? Yeah, but you'll probably lose a couple of $100 copying the trade if you don't exit the trade at the right time. You don't know the profitability window that you're supposed to be able to get out on this, right? Isn't that important? If the trade does go against you, what can you do in it? All of those, that is what the courses happen to be. Now, last but definitely not least, this is what we call huge potential minimal risks. This happens to be none other than our risk twist spread. This is probably where I put the most weight into. So I hit a risk twist spread in February out of the ballpark. There's many people that are in the TheoTrade chat room that were in a similar risk twist spread, but most of us, when I say hit it out of the park, one contract was worth more than $1,000. It paid for, I've been doing risk twist spreads now for 18 months. It paid for 18 months of risk twist spreads and then some. And once again, I just put on more risk twist spreads recently as this, last bout of volatility has kind of dried up. So as this volatility is down right now, I don't look at that as a negative. I'm looking at it as a positive. I am buying. This is buying volatility. This is where a lot of people go, I should only sell options. Yeah, but here, okay, in a dirt cheap manner, you can actually get yourself long volatility. If the volatility explodes, this thing is going to work, right? A couple of characteristics of the risk twist spreads. The increased value when exposed to heavy volatility. Pretty much what I just said. Increased value when the markets sell off and sell off big. Significant profit potential in a big downside move. Losses are minimal. If markets rally, okay, you can't lose more than you paid for this thing. That's it. It's going to cost you. I told you it's going to be $100, $120 every quarter. Okay, so it's very, very minimal loss if the markets continue to drift. Need only be placed a few times a year. It's a quarterly strategy. It's perfect to reduce risk. It's also a great tool if you're looking for returns on a big market event. There's always those that are what I call crisis-seeking traders. I would definitely consider myself one in that camp, a crisis-seeking trader. But here's another one where you look at it for the first time, and I get it. You look at the strategy, 1 by 3 by 1. I don't know if I can get this. You can get it. It's easy to do. Okay. If you have limited experience, as I'll say again, we can show you how to do this. We've got a class on this. People, we have a class on pretty much everything. But the detailed recipe for the risk twist spreads, this one, without an equivocation, is the most detailed recipe we have ever built in any class, bar none. That one is out of the park. I mean, why do you need to learn these strategies? And you have to be able to answer that yourself. Because, again, there's a lot of people that are tuned into the chat room right now, and they're members, and go through all the TheoTrade classes. But, why do you need to learn these strategies? If you've never been through the classes before, you need to go through these strategies. Okay? You need to go through them because, well, here's 20 years of the S&P 500. I mean, one of the things that I'll reiterate, listen, I started trading right in this neighborhood here. I think this is, when I say why do people have to, go through and learn some of these strategies, I started trading right in this neighborhood here. We had the up, we had the down, we had the up, we had the down. I've been through it all. I started working in the brokerage industry. Literally, I started working in the brokerage industry right here, right in the neighborhood here, pretty much at the peak of the NASDAQ. And it just got downright ugly from there. People lost 50% of their nest egg, and they did it again, right? And here we are. I mean, I'm not telling you we're going to go down, but I am telling you these are 3 strategies. Number 1, the Atomic Hedge that can absolutely mitigate the downside risk, or you can just take shots to the downside. If you're at all nervous that we're close to the end of the cycle, you need to be employing some type of hedges. And again, I know there's a lot of people that'll tune in tonight, and even people that have been coming to TheoTrade, for years, and they still do not employ the tactics. I mean, that's why I'm going through this tonight. This is not just about thinkorswim. This is to kind of beg people listen, employ the right tactics to mitigate risk. Now, this is a little bit about what we do at TheoTrade. This is what we call kind of, we build recipes, criteria. It's what we actually do at TheoTrade. I just went through a couple of different strategies in here, but trading is really about answering the what ifs. What might be a good stock or ETF candidate for a risk twist spread or a VIX volatility spread or atomic hedge? Well, we can answer that. What's the correct options expiration cycle to use? Well, we can answer that. How much capital do I commit? If you're going to use a risk twist spread, an RTS spread, you got to know exactly how many contracts, how many units to use. What strike options do I buy? What strike options do I sell? When do I exit these trades? By the way, I will stress the exit. Specifically, for those of you that have some experience in here, the exit is absolutely critical with a risk twist spread. Get that one wrong, it's going to cost you a lot of money. And that's why I tell people listen, you can go home and you can learn about these things, but we have the answers. We just build the recipes with definitive criteria and checklists for each strategy and each all the unique variables you're going to encounter. How, when, why, at what price. It's just the beginning of the variables you're going to face with an atomic hedge, with a VIX volatility spread, with a risk twist spread. The secret is, you've got to go through some of the criteria. And we spent literally years fine-tuning some of the stuff. In fact, those 3 classes, okay, that's accumulation of years of trade. It's not just some of my trades. A lot of people that worked with me in kind of constructing some of the criteria for these classes. You've got to follow the strategies and the corresponding criteria. It requires the utmost attention to detail, and that's one of the main focuses of this. Okay, here's how you can obviously trade these strategies. We have put together a course curriculum specifically for these 3 classes. Now, I'll bring people that are in TheoTrade into the mix here momentarily. There are 3 individual courses in here. The individual courses are what we term the next big short. It's a risk twist spreads course. We have the next course is trading VIX options, VIX volatility spreads. The 3rd course in here is reducing risk and maximizing returns blueprint. It's the Atomic Hedge strategy. Each one of these courses, okay, upon being initially offered, were $199. And by the way, these courses are fairly recent, okay? But courses are available immediately. They are already recorded. They're ready to go. You have unlimited lifetime access. Each one of the courses, and again, there's, a couple of hundred people in the TheoTrade chat room right now. Most of them would have paid $199 for each of the courses. We're doing the entire bundle for $297. It's what we kind of call the mass profit workshops. In addition to the 3 courses, all of the slide decks, including all the entry and exit criteria, are available for download. By the way, the website here, before I go any further, I'll also talk about some of the other bonuses that we put in here. It's TheoTrade.com/mass profit. Okay, TheoTrade.com/mass profit. I'll also mention before I forget, this course qualifies you for a reduced commissions rate at TD Ameritrade. We have other deals with other brokerage firms, but our current, and I would say our best commission structure by far and away, is what we have currently at TD Ameritrade. I will also kind of mention to this, all right, by far and away, this is the best deal we've ever put together. And we're doing that. Come on, we're coming into summer. We realize that people have huge risk on, and these are 3 courses that, if somebody stops me and says, what 3 courses do you feel most strongly about? It's them. I mean, this is the 3 courses. Like, if you're going to be involved in this business, I think the entrance to get involved in it, $297 is reasonable for every single person in here, and it should be. I mean, listen, we're not here to take a ton of money from people. There are programs that people have gone through, and they spent $3,000, $4,000, $5,000. Okay, these 3 classes, okay, will absolutely blow away anything that you guys have been through. I mean, I'll put these 3 classes against anything. That's the Pepsi challenge for you, because the risk twist, the VIX volatility spread and the Atomic Hedge, it's pretty much lifeblood of what I do. With that, there are 5 separate bonuses. Some of you guys have already watched Options 101, Options 201, okay, and Options 301. These are absolutely included, okay? In addition to it, we also have a brand new, okay, this is actually done by Corey Rosenblum, 1 month of access to a daily idealized trades report. And last but definitely not least, we have 1 month access pass, okay, to TheoTrade. That means you get to go into TheoTrade and, well, I'll explain this here momentarily, but in TheoTrade, we do live trading throughout the course of the day. We have 6 different instructors in there. We'll email out trades to you. We email out nightly reports. It goes on and on and on and on. We also give you access to all of our indicators. We don't charge for indicators. You don't need to buy anything after this. People always ask me, it's $297. What am I going to be charged after that? Nothing. By the way, Yeah, people ask that all the time. If you don't want to, it's $297. That's it. And that'll also give you a month into TheoTrade. But you're not paying the $297 to be a month into TheoTrade. You're paying $297 because you want to learn to protect your proverbial backside in the event that the markets get a little wild. And that's what the risk twist spread, the VIX volatility spread, and the Atomic Hedge strategy are going to do for you. So let me go into a little bit more detail. I'll take you to the site here in a momentarily. But this is a little bit about the risk twist spreads workshop. It's how to place low risk, high reward trades, maximize returns for a market crash while minimizing your risk. It's all you need is one market crash. The risk twist is designed for a risk one to potentially make 10 or more in a sudden market sell-off. All the entry exit criteria, that's what the class is about. Lifetime access to the on-demand recording. The risk twist class alone, you'll get your $297 out of that class alone. The trading VIX options, this is the VIX volatility spread. By the way, I want to make this clear. Each one of these classes is just over 3 hours. So there's about 10 hours just in these three classes. And it's a little bit overwhelming, but I mean, to give you like an introduction to TheoTrade, I mean, my feeling is you'd rather be overwhelmed rather than underwhelmed. By the way, there's a lot more than just 101, 201, 301. I'll come to that here momentarily. So this is a little bit about the risk twist class. Moving on, trading VIX options, the VIX volatility spread. This is risk one to be able to make for minimize risk, maximize returns. How the trades can be done with a small account. You use small account size. You can use this as more of a set it and forget it strategy. You don't have to continually monitor the positions. You kind of put this aside. And yes, you have lifetime access to that. Everybody inevitably asks that question. Last but not least, the Atomic Hedge. Okay, this is the reducing risk and maximizing returns blueprint. You got a retirement account if they're at risk to massive losses. Okay, how to maintain upside potential while controlling downside risks. And again, this is a step-by-step workshop on how to systematically build an Atomic Hedge, provide you what strikes, what expiration, how to get in this, how to get out of it, lifetime access to that. Now, okay, and by the way, again, it's TheoTrade.com/mass profit. Now, for those of you that are in the TheoTrade room, right, listen, you have access to many of these classes. I'm just reiterating many of the classes to you. Now, TheoTrade, this is a 1-month access pass. So, by the way, this is all for the $297. This has everything we do online. Daily coaching sessions, live trading chat room, right? So, when I say daily coaching sessions, we broadcast for about 5 hours a day, a live trading chat room, instructor and coaching archives, start here selection, and I'll actually show you the start here in just a moment. We email trade ideas, and here's the proprietary indicators from it. So with that, I'm actually going to show you a little bit about the site itself. So bear with me here momentarily as I pull up the site. By the way, this is the web address that you effectively need to go to. That's TheoTrade.com/mass profit. You can also email us. You can call us. Just click add to cart. What I also want to show you, this is the TheoTrade chat room. All right. So I like this. All right. This is everybody that's in the chat room right now. Okay. Be nice, everybody. There's quite a number of people in the chat room live over here. You're watching me. Okay. Watching them. Anyway, this is how we broadcast directly into the chat room on a day-to-day basis. So we're just broadcasting live into the chat room. We don't have to use GoToWebinar, none of that junk. We just broadcast using an HTML stream live into our own room. The 1-month access includes Start Here. So if you click here on Start Here, okay, it gives you access to everything from Options 101, Options 201, Options 301, Order Execution, Part 1, 2, and 3, Crash Course and Option Geeks, preparing your trading day, getting your risks under control, what products to watch and why, okay? In addition to all of this, and I know that, you're looking at this like, okay, this is a lot. It's a lot, right, to go through. I always tell everybody, just please do me a favor, give up Netflix for like a month, give up Amazon Prime TV for like a month, go through it. I mean, we're trying to give you access to nearly everything that we've got, all right? We're giving you access to 3 of the best classes. We're giving you access to Start Here. Let me show you another area that we give you access to. We give you access to all of our coaching archives that we've ever done. Like, you can type in anything you want, like risk, twist. I mean, I could just risk. Let's just type in the word risk and see what comes up. They're all, okay, searchable archives. Here you go. Easy enough for you. I just typed in risk. All right, brushing up your risk management skills. All right, that was May 7th, May 9th. Okay, that was just happened. I just did this like, a week ago. And again, all of these, when I say it's a coaching archive, what does it look like? I don't know. Let's click on it. So this is part 1. You click on it. It's an hour length. Okay, this is an hour-long video. Hit play, kind of maximize it. It looks just like, just looks like the the video that we did tonight. But these are much more methodical. We go through, we spend time. I'll come back over to the member chat room for you. But I want you guys to know all of this is available to you. Now, in addition to it, the archives in here, the member chat room archive, the coaching archive. I also want to show you a little bit about, there's a trade tracker. This is trades that we place. We'll email out. Here's also the shared charts, scans, and studies. As I said, we do not charge anymore, okay, for anything proprietary. Okay, these are what we call proprietary scans and proprietary studies. We just give them to you. Okay, that's how we kind of function here at TheoTrade. It's listen, people come here because we're traders. They come here to learn, all right? But they also come here because we do not nickel and dime people to death, and that's extremely important to us. So the chat room's going crazy in here, all right? With that, let me come back over here to the Mass Profit Workshops. You want to read through this a little bit? Fantastic. I am going to answer some questions for you guys. And again, I hope everybody's kind of enjoying tonight. I'm going to answer some very direct questions here momentarily in the chat room. Make sure everybody's good, tuned in, turned on. All right, let's get to it. So, is the wrist twist similar to an iron condor? Absolutely not. It's completely the posing of an iron condor. That's okay though. It's totally different than an iron condor, Rose. So, no. By the way, deals at Canadian brokerage firms. Well, not necessarily, but I can actually teach you a couple of tricks of the trade in Canada. If you email us and say, listen, I'm in Canada, I need a cheaper way to be able to trade, we can actually show you a little bit about that. By the way, thank you, Dr. Bill. Somebody was just coming in and just bought the Mass Profit. Again, if you guys have ever been to any of the webinars that we've ever done, we put together some pretty good classes, but this one is bar none. It's the best deal we've ever done. I wanted all 3 classes packaged together. Why? Because all 3 classes, okay, they fall in that same exact arena. And the only thing I ask of you is, go through the classes and so forth. Please come back and be like, hey, you saved my bacon. Again, I spent hundreds of hours putting together those 3 classes. I mean, literally, like, you'll see it when you guys start going through the PowerPoints. You can watch the classes, even start watching them tonight. You will see there is hundreds of hours of work put into that. It is hardcore. All right, a couple of questions that I am going to answer in here. I want to be fair to everybody. First of all, the classes are recorded. They're all on demand. You can start streaming them this evening. Okay. Another person came in. If you're having trouble, like somebody said, I can't get my head wrapped around options. Listen, it sounds a little like basic, but even if you've had some options experience, by all means, please watch the Options 101, because even if you've learned a little bit about options, I find a lot of people, they just learn this business the wrong way. Okay. I don't mean that to be, defeating. I'm going to teach this thing from a probability kind of methodology. And I think it's important that you do go back to the Options 101, 201, because you're going to pick up nuances that I think are going to help you down the road, because I have a vastly different way of looking at the options market. And listen, options, you can buy them or sell them. That's never going to change. But how we approach option markets might be a lot different than what you've learned. So by all means, please go back through that. Can you do most of these strategies in an IRA? Of course you can. You can do this stuff in an IRA. All right. In fact, the account that I've been showing all night, I really, I'm at the point in my career where that's what I traded. I'm not getting that up there in the years. I'm 42 years old. I've been around trading since grade school. Literally, I grew up around traders. I've been around trading since grade school. I started trading though at 22 years old. But I'm at the point, I was with the company that we took public and so forth. I don't have to worry about, day-to-day living expenses. So I trade extensively in my IRA. So I'm very, retirement account specific at times. However, this is the first year I've done that. Up until this point, I always traded in a regular taxable, portfolio margin account. So another person that was saying, by the way, I like this one. By the way, another person is saying, hey, I can't get approved for options. We can help with that. Again, I did work at the brokerage firm business for quite some time, and I can definitely help you guys get approval for options. There's no problem whatsoever with that. So, by the way, Wally was saying, can't do shorts in a Canadian IRA. You can do if you can trade options in the Canadian IRAs, and some of them do allow that. We can kind of help on that front. We will absolutely, help you where we can, and I can suggest a couple of different brokerage firms that you might want to go to. So if you do not have experience in options, and the brokerage firm turns around and says, well, you don't have this level of experience, we're not going to give you this, we can help with that. Much of our education qualifies as experience. Okay. All right. Can the SPY example again be traded? Yeah, of course you can trade this in the Spider. That's no problem whatsoever. How much commission reduction will TD Ameritrade give at this program? So the commission reduction is so good that there's one requirement I have from TD Ameritrade. We will type in the commission reduction to you. We will not mention it live on air. Obviously, there's 11 million clients of TD Ameritrade, but our commission discount at TD Ameritrade is quite stellar. Again, I was obviously employed there for a very, very long time. We've got a great relationship with TD Ameritrade. And, hey, listen, they want us to use their technology. I love their technology, help build some of it. And it's just a good relationship all around. But I think you guys will really appreciate the discount. And again, if you have an account there, fantastic. You get a discount even if you already have accounts. It's not like you have to open up a new account. It's good. I mean, listen, you're fine. Other questions that may be in here. Okay, I think I got the vast majority of them. So, oh yeah, you know what? Somebody else was kind of tuning in over here, and the question came to us. Sorry, I apologize. I'm just reading some of the questions in here. Somebody was saying, do the strategies, lay out the strategy and the criteria. And yes, the course itself will lay out all of the strategy, and then it lays out the strategy of what a risk twist is, and then goes into the specifics of the criteria. Hey, listen, you sign up this evening, you can join us in the chat room tomorrow morning. The chat room is live, right? I start every morning at 8:22 Central Time. That's part of it. You have a full month access to TheoTrade, right? And when you say a full month access, you're again, we talk for 5 hours. Actually, tomorrow's Thursday. We'll probably do about 5-6 hours tomorrow in the chat room, and we're streaming to you and trading with you. A little overwhelming, absolutely, but go through the Start Here section and you'll understand much of this. Okay, so again, that's all part of this, and you can come into the chat room and say, hey, I'm a newbie, help me out with that. I'm running out of time this evening. I want to thank everybody for joining us. We're going to stay on here, answer a couple of more questions. I like this one also. Somebody, last question I got to get in here. Using TOS is formidable. Okay, no problem whatsoever. I have got spectacular demonstrations of thinkorswim built right into the site. So if you come under TheoTrade tutorials, I have demos built for just the tools you're going to need. Forget about all the daunting stuff and all the big scary stuff on here. Analyze tab, scan tab, really short demos of what you need to use on that trading application. I want to make sure that you're versed in it. And if, by the way, if you do not want to use thinkorswim or TD Ameritrade, that's fine too. We do have deals with other brokerage firms, but that was kind of our theme for this evening. I want to thank everybody. By the way, Rose, yes, you can definitely do that. I want to thank everybody for joining us this evening. Have a wonderful evening. You have questions, we'll stay here and actually type into the chat room. Again, the web address to enroll for this evening is TheoTrade's.com/mass profit. Thanks, everybody. Have a wonderful evening. Bye-bye.